Good afternoon, dear traders, and it's time to come back to euro against US dollar because yesterday we had interest rate decision. So the ECB has finally raised its interest rate from 2.15% to 2.40%, marking the first rate hike since 2023. On the surface, this is a positive development for the euro. However, the market reaction showed that traders are focused less on the hike itself and more on what comes next. The initial response was far from straightforward. At first, euro against US dollar attempted to move higher, but the rally quickly faded and was followed by a wave of selling after the news. Some participants choose to take profits on the news, while others remain skeptical about how long the ECB will be able to continue tightening monetary policy. Despite the selling pressure, bears failed to gain full control. As the market approached the psychologically important 1.15 level, buyers stepped in aggressively. Once again, this area proved to be a major medium-term support zone, and we spoke about this earlier. The result was a strong rebound that pushed euro against US dollar back toward the key resistance area around 1.16. This level now becomes the main battleground for the next move. From a technical perspective, support around 1.15 has been clearly confirmed. The recent bearish structure has stalled. Price is once again testing resistance near 1.16. If buyers manage to secure a sustained breakout above 1.16, the next upside target could be the 1.16 and 5 area, where the next significant resistance zone is located. Should bullish momentum continue to build, euro against US dollar could develop a meaningful short-term uptrend after several weeks of corrective pressure. Fundamentally, the euro is currently supported by several factors. The first ECB rate hike in years, persistent inflation risks driven by elevated oil prices, expectations that the ECB is not yet ready to quickly return to an accommodative policy stance. That said, the market will deliver its final verdict over the coming weeks. If demand continues to, the probability of broader euro recovery will gradually increase. So I think that if it will be from 1.15 to 1.16 area, if it will break this level, so it will make the first aim 1.16 and 5, and the next break out can lead to 1.18. And so for now, the key takeaway is simple. After the rate hike, the market refused to accept prices below 1.15. That's the key level, and that's the key level for buyers and demand. And that's suggesting that buyers remains firmly committed to defending this important support zone.